Well, good day traders, and certainly for regular readers of my daily fix would have seen that we've been holding a short bias on Euro Aussie for some time, trading in and out of that position. And I think the fundamentals now are aligned for a renewed look at that position. I mean, if I have a look at the recent court ruling from the German Constitutional Court against the PSPP programme effectively being unconstitutional, that could have big implications, not just for Germany, but for the Eurozone more broadly longer term. And it's enough reasons for me in the next couple of months to shy away from the Euro, at least from buying. And I think that's exactly the same situation with the reduction that we've been seeing in implied and realised vol. People don't want to be long funding currencies in that backdrop. And then, of course, you've got the fact that the Aussie dollar's working quite nicely with this pickup that we've been seeing in the S&P and the Nasdaq more broadly. So let's take a look at the backdrop which we're seeing and have a look at those positions again.
Well, the first chart I've got is the relationship between the Australian dollar and the S&P. As we can see in this top pane, we can see the S&P and the Aussie dollar, they're moving very, very closely together. Now look at the 20-day rolling correlation between the two. You can see that stands at 80%. So 80% of the daily variance that you see in the Aussie dollar can be explained by the S&P. If you think the S&P is going to go higher, effectively the Aussie dollar is going to go for the ride as well. Okay, let's look at the technical setup on these markets to give us a backdrop of the flow of capital. And the US 500 and the Aussie dollar, we've just shown that there's a very strong correlation between the two. If the US 500 breaks through this 30th of April high, we go into sort of 3,000, which a lot of the investment banks are saying that the CTA, the trend following systematic funds, will flip to a much larger long position. We've also got this 200-day moving average. Whether that acts as anything resistance is yet to be seen. But I think, if that continues to go higher, then the Aussie dollar should be the net beneficiary of that. Have a look at the Aussie against the greenback. You can see that we're, again, just testing this 30th of April high in itself. It's through this 100-day moving average. It looks like the bulls are firmly in control here. So, yeah, I think this is one to look at. Then you have a look at the idea that we want to take the US dollar out of the equation. Let's flip it to euros, where we don't like the euro. I don't like the euro. And we can see here that the price now is breaking through these April lows. So I like to be short here. In terms of a stop loss, I like to be look to wait for the close above this exponential moving average, the 5-day exponential moving average. As long as this is defining the move lower, I think we can go significantly lower in this cross going forward. Yeah, okay, it's oversold, but until price can close above this 5-day exponential moving average, I'll be looking to add to short positions on the downside here. I like to look at the options market as a really clear guide to managing risk. And you can see here in terms of risk reversal. So this is effectively the skew or the difference between 1 week call implied volatility and the premium that wears over 1 week put volatility in Euro Aussie. So you can see at one stage we saw call volatility wearing a premium of nearly 8 volatilities over puts. The market was incredibly bullish on where things were going and the extent of the move. Well, that's come down to 1.46. So the market's still net bullish on Euro Aussie, but it's come back down to much more normal levels and where that's going to go. It generally doesn't go below zero. If we have a look at implied volatility in Euro Aussie, you can see that's come back down to about 11%. That was at one stage 42%. So the moves up and down over the week are around about 230 points if we put that into the Black-Scholes model. And again, we adapt that into our risk formula and our position sizing accordingly. So have a look at the idea. If you like the idea, do reach out to myself or the team at Pepperstone for more information and trade it with Pepperstone.